All right, everybody, here we go. Welcome back to Stocks by the Numbers. Happy Friday. Hope everyone's gearing up for the weekend, getting a little R&R. But I wanted to take a look at a couple of these aviation stocks, and I appreciate the fact that they're trending. I understand the evtolls and, air taxis and, a company like this, ACHR Aviation, ticker symbol ACHR, listed here on the New York. Stocks basically back up to that $10 level that I know a lot of these SPACs, we've surged them back to $10, $12, kind of back to where they started. But technically, the company isn't really backing it up with that value. Now, I understand something like Archer Aviation. I know basically like a lot of these other tech stocks or vehicle companies, right? The EV stocks, people just want to be involved and they just don't want to miss out. That's what it always comes down to. It always comes down to the FOMO, right? And something like Archer Aviation, I mean, obviously, if you're telling me you bought into the stock a while ago, you're hoping for bigger and better things, of course, I'm pulling for you, right? I hope it works out. I know they recently made a separate segment of the business, Archer Defense, right? That's going to focus on hopefully like government contracts coming in. So obviously, I hope they do get the updates and the headlines that you guys are pulling for, and I hope those contracts do start coming in. At the moment, though, they're not here, right? And that's obviously my personal biggest concern. So again, I appreciate the fact we may have squeezed it back up to that $10 level. Looks like it really started to take off after elections, and it looks like these earnings here, as you can see, no revenue coming in. The loss was a little bit more narrow than Wall Street expected. They lost 29 cents a share. Analysts were expecting a loss of 31.6. So the last couple of quarters, they've been posting slightly more narrow losses than Wall Street expects, which of course is a good thing. But market cap sitting here at over $4 billion, right? And if we go back, again, we had some losses here a little bit wider than expectations, and now you can see the last two quarters were beating expectations, but technically no revenue coming in. So of course, for a company that isn't doing any business, to value them at $4.25 billion seems a little drastic. But again, I do know everyone's pretty pumped about it. So, I can appreciate the fact everyone's bullish. But as we see right here, I drew out a bunch of trend lines going back from the low September 26th of 24, and you can see I cut across the bottom of that candle right there, October 10th, and then I came up, that's like the body of that candle on the 11th, looks like the bottom of that candle on the 22nd of October, right? So I draw out these trend lines, but we can see also we had a gap up right at the tail end of November. You can see the top left of your screen, the high 622. Then the next day, the low is 642, right? That's a quick 20-cent jump. But you can see we spiked up to that 10 level and then immediately pulled back, but technically did not fill the gap. And you can see the low of 626. So there is always that potential that it can just flash down, fill that gap, and then, try to bounce and run back up to 7-8 or whatever. Technically, we're in this kind of upward channel right now. So these, in my eyes, are the trend lines you have to keep an eye on. We could potentially make the argument that we have a shoulder with a head and a potential shoulder forming, but not really. But either way, an upward channel like this could signal a potential breakdown, right? So that's why I just want you to be aware of that gap fill at 622. And let's just say if we hypothetically make it out to here, and then we start coming down, let's just say if we, again, we try to be realistic. We can't be completely positive or even completely negative, right? We have to be realistic. And I understand the last two quarters were beats on the EPS side, but again, the two before that were misses, right? So it's kind of 50-50, so we don't really know what they're going to post. But if we're in this upward channel, let's say hypothetically, maybe we start to come down and break towards it going into earnings. Hypothetically, the loss is more than we expect, right? We can easily drop down to this fib here of about $8. And then if we slowly come down, again, I'm being conservative here, you can see potentially high sixes. I mean, honestly, in my opinion, I don't know if I would say the stock should go back to where it started down here at 290. But even if we come down here and fill the gap and slowly come back down, you can see something like this, like a retracement back to $5, the low fives. In my opinion, that's realistic. I mean, that would cut the value in half, which, and again, I'm still giving you the benefit of the doubt, right? Valuing this company at 2 billion in change when they have no revenue coming in. So you can't get too mad at me, if we say we should pull back to 5 or 4, but we pull back to 5, that would obviously be about a $2 billion valuation, which could still be viewed as overvalued. But I understand, again, if we check something like FinViz, we can see the short float sitting here at 25.5%. So right now, I can appreciate the fact that it had the surge, and it might actually continue to stay up and stay in this channel, right? But these obviously are the trend lines you have to keep an eye on, in my opinion. That's the upward channel you're in right now. And let's check some news here. Price target maintained 11 a share. I mean, we're basically there and just hit it. So, I don't know, like, where would you go from here, right? And that was only a week ago. Wait a minute, the 16th. The stock just hit 12 and bounced off the fib of 8 and got back to about 9.5 when they came out and said 11. I mean, it's just a conservative play from an analyst perspective, right? Because again, even if you're looking at this technically, as we just did, if we're going to stay up here in this channel, you can say, oh, it's going to get to 14. Or you can expect it to break, as I'm expecting, and you can put the price target back here at this fib level that was just tested, right? Nice, $8. But no, 11, I don't know, random. Maybe I'm beating them up too much. Share slide. Let's see here. Lead developer, electric vehicle, yeah, okay. Experience stock decline. U.S. restrictions on AI chip exports. Archer Defense, right? Dedicated military aircraft division, alongside a $430 million capital raise. Aggressive stock buybacks. Maybe in a year or two. Growth strategy toward FAA certification. Okay. Key partnerships in place. Okay. Sold 600,000 worth of stock. That doesn't seem like a lot. JP Morgan, neutral. Raised the price target to 9, right? Essentially almost right at that key fib level of 8 from 6. Huh. Cautious near term. Current short interest at 24.6%. When was this? January 14th. It's about 10 days ago. Okay. Reflects continued bearish sentiment. Well, obviously, recent short sellers just got screwed, right? Because the stock exploded. But anyone looking at this through the long-term lens, in my opinion, again, up here, it could break down out of that upward channel sooner rather than later, in my opinion. So, if it has like another spike up and all of a sudden it's back at like 1240 or, 1310 or something, I can appreciate the fact if traders will look at that and say, okay, now I'm stepping in to short the stock because it's dropping back down. That would be pretty understandable, because you have to remember, again, $4.25 billion valuation right now with no revenue coming in. I mean, if you really think about it, if they sign a $500 million government contract, obviously that would be very good news. But the problem is we just kind of pumped the stock, right? So that could be viewed as potentially already factored into the price of the stock. And usually when these companies sign these government contracts, you and I both know it's usually like a multi-year contract, right? So the first year they might get like 120 million, then the next year 200 million, right? And it's going to like continue to increase like that over 2, 3, 5 years, whatever the length of the contract. So, a lot of people see a headline like that and they're like, what? They just got $500 million? No, that's not how it works. But again, even if we bring in that, again, that would be their only revenue. And we would still be valuing the company at roughly 8 times this quote-unquote potential 500 million hypothetical government contract that could be coming in. You understand what I'm saying? So that's why, again, I appreciate the fact if this is pumping more off the short interest, and some technical traders out there might comment down below and say, no, it's going to break up to 1340, or, your top trend line of that channel where it's, 1440 or whatever. That's where the stock is going. So I can completely appreciate that argument. But just remember, if that's how you're looking at it, then that's what you have to be aware of, and that's the execution you have to have on it. Meaning that if, let's just say 2 weeks from now, it starts to run up to the top of that channel and it hits $14, you have to remember what you were looking for and what the original strategy was, right? And if it was a short-term, short squeeze play and you were looking for the break up to 14 and then it gets there, then in my opinion, you should probably look to hit the sell button, right? Because your strategy worked out, it came to fruition, you're up big in profits, boom, take the money and run. So, that's the problem as well with a lot of traders and investors. We'll go into something with a strategy. And then even if that strategy it works out and the situation actually materializes, sometimes people don't secure the profits or follow the initial strategy they laid out for themselves. You understand what I'm saying? So again, if you're telling me, listen, if it goes to 14, I could be up big, but I'm holding for the next 5 years. Of course, I understand. It's your money. You do whatever you want with it. But, just a little tidbit there. If you have a certain strategy, make sure to stick to it, especially if it works out. But, we're reading Midnight Aircraft, okay? Coupled with the active pursuit of commercial and military contracts, okay? Strong financial standing. Military evtol. Designed for urban air mobility, has already garnered substantial orders from United Airlines, totaling up to $1.5 billion. Okay, when though? When? The company's high-volume manufacturing facility in Georgia is on track for production commencing in early 25, which is right around now, inside of the next month or two, following FAA type certification. Simultaneously, Archer Defense, the company's military division, is collaborating to develop hybrid. DoD, third quarter, held a strong cash position of $500 million. Again, so no revenue coming in. Again, potential orders, but we're waiting for the FAA certification. So I do think it's overvalued, even with what is potentially coming on the horizon. Research and development, healthy balance sheet, 430, raises total funding to nearly $2 billion. Okay, we're reading. Stellantis, Archer aims to reach an annual production capacity of 650 aircraft by 2030. Well, we'll see what happens. Final stages, regulatory hurdles. Full certification by late 2025. Right? By late 2025. So that's what I'm saying. So right here in the short term, if we're squeezing it up a little bit, people are piling in, and that's why I'm saying, again, if we're going to pump it up to 13, 14, 15, that'd be good, obviously, for all of you invested. But we've seen this time and time again with a lot of these stocks, right? We pump them a little too early, and then we slowly have to start bringing them back down to earth. And then 8 months from now, people will pile back in waiting for this announcement, right? You understand? So again, we know none of these moves or breakdowns are guaranteed. Anything can happen. But if it does run up a little bit more and then start to drop big, in my opinion, it would make perfect sense. Because technically, you still have some time. Furthermore, competition is intensifying. Companies like Joby vying for market dominance. Archer must effectively differentiate its Midnight Aircraft and forge a strong market presence. Hinges on winning contracts. While the partnership strategic advantage remains uncertain. Yes, we know that. They don't have the contracts until they have the contracts, right? Archer, like many pre-revenue companies, financial risk. Yep. Carefully monitor the company's burn rate. Recent restrictions on AI exports. All right. So again, in theory, in the longer term, I can appreciate the appeal. Absolutely, I can appreciate the appeal. And that's why, again, here in the short term, you could spike up and you can see maybe $14 if you get to the top of this channel. But again, technically, it really should break. And coming back down to 6 and 5, I think is conservative. JP Morgan, we read that, 6 to 9. Maintaining buy. Concord price target raised to 14 from 11. See what I mean? So they're looking at the top of the too much coffee. They're looking at the top of that range like I am. They're looking for 14 from air taxis to aerial warfare. Okay. But even in the numbers here, it's again, it's obviously overvalued in my opinion. Got about $500 million in cash, about 80 million in debt. That's slowly been coming up, but of course cash is still outweighing debt, so it doesn't seem like a big issue right now. But you can see how, we're losing, looks like about 50, 60 million in change quarter over quarter, dropping down, getting some funds up, and then potentially dropping down for the next 2-3 quarters, right? So we understand the situation that we're in. The free cash flow also widened a little bit. You can see Q3 of last year, minus 82.6 million. And here, minus 116.8 million. I'm sure, again, it was mentioned, increased operating expenses, investments into R&D and whatnot. I can understand that, but 500 million, debt 80 million, so that's what, like 430 million, plus the equity, 467 million. So the quote-unquote fair value of the business is, what's that, 890 million. And that's what I mean. Now we have like a 5x multiplier on that. Book value just got back over $1. It was down to 99 cents last quarter. It's sitting here at $1.10, right? So we're 9-10 times book value. The enterprise value, interesting. I was looking at this. Look at the enterprise value here. A couple of $100 million. We get up to 1.4 billion. Then we pull back 800, 700 million. And then, in my eyes, just because the stock started to climb recently, now the enterprise value is up to 3.8 billion, right? But if we go back here, you can see again, this is why I say, in my opinion, a company like this sounds great in the longer term. But until the revenue and contracts actually start being signed and that money starts to come in, this is why I say, in my opinion, a pre-revenue stock like this should really be valued at, high 100 million, 1.3 billion even, right? So that's why hanging out 900 million, 1.4, 800 million. In my opinion, that's kind of around the fair value, right? As we just did in the numbers, it's around 900 million. So that's why, even if you double it, you're looking at 1.8 billion. Which would technically be higher than all of the enterprise values going back over the last 8 quarters, but of course would be a big drop from the current valuation. So, again, it could be good in the long term. It does have the ability to really sell off and pull back, especially if markets decide to drop down. I always like to just mention that concern. And even looking at the projected revenue here, I mean, 2026... 184 million. Listen, that would be phenomenal. But again, even if they bring in 185 million for 2026, I mean, we can technically keep the stock right here. Right? If I tell you this company brought in a little less than 200 million in revenue, but it's worth $4 billion right now. Going out to 2027, you can see expected to jump up to over 577 million, right? Now that is a much, much larger number. So that's why if we get to that point where we're bringing in 500-600 million in revenue for the year, we're sitting here with 400-600 million in cash on hand, very little debt, maybe 100 million in change. I got a fire truck going by like always. But, if we get to that situation, then I can appreciate the fact if we're looking at a $5-6 billion company, right? But that's why right now it seems like more of the short squeeze, but I know I'm rambling on like I always do. wanted to look at the other one as well. But RSI quickly, 56 on the daily. We can see the stock ran up and pulled back right to the mid-Bollinger Band, basically 994, stock 997. And we can see this little upward channel we're in, potentially wedging if you want to call it. And we could be ready to break maybe over the next day or two back down to the very low 8s, sub 8, potentially. 50-day moving average 818, right? So that's why, again, we could potentially come back and break and retest this around this $8 fib level. So a couple of levels over there for you to keep an eye on. 200-day moving average 477. In my opinion, again, that's realistically where the stock should be. We said if we cut it in half, we're still talking about a $2 billion market cap, which would bring us back to around $5. So have to keep an eye on it, see if it breaks that upward channel. MACD looks like it completely flattened out, but again, we can continue to slowly climb up inside of this potential wedge and get close to crossing and then reject, and that's where the break could be. So something to keep an eye on. Switching over here to the weekly, we can see RSI sitting at around 66. We did recently break up above that 70 benchmark, but again, I appreciate the fact it's 24-25% shorted right now, so I understand the appeal. And the top Bollinger Band on the weekly, you can see 1256, which technically would be a new 52-week high. That's why I'm saying we can potentially keep bouncing here upward in this channel, or we can have a premature break and come back down to sub 8. So you can see here the moving averages on the weekly as well. 50-day 494, 200-day 512. So again, you could make a very strong argument that you could pull back down to the 8s, and even a stronger argument that we really could break that back down to around the $5 level before we maybe find our footing and then start to bounce from there. So that's why I think this trend line is actually more key than this one. And you can see if we technically ride the wave, you can see, look, connecting to those lows, and we come up, and then if we come down and break and come down and bounce, right, it would technically still be above that support level. So might be, again, if you like it in the long term, that's fine. But, you know, if you do happen to have a couple of bucks on hand, if you bought shares recently at 8, if it does pull back to 490, like we always say, if you liked it at 8, you should love it at 5, right? MACD on the up and up. This is why, again, we could be in the middle of this squeeze play, but just be careful. FTAI Aviation, it's funny too, because someone mentioned this several months back, and I was drawing out some trend lines, and I drew out how it was in like this upward parallel channel. And I was looking at it, and I was like, wow, it looks like it's really going to break down. In the numbers, I felt it was overvalued. And, you know, I drew out some lines, and I was like, oh, yeah, this stock should come down to like $50. And then I didn't do a video on it. And then I looked at it recently, and it was like down here, big on this day, last week. And all of a sudden, it was down at $90. So I would have looked like an animal. But unfortunately, I did not make a video on it. But I just want to show you this trend line on FTAI Aviation, symbol FTAI on the NASDAQ. And if we go from these lows here during lockdowns and come up, you can see I touched those lows there, October 22, December 22. And you can see how it's been on the up and up. I know they're reporting some decent numbers. Revenue started to come in. And you can see, look, we're up to 300 million. We're beating on EPS. Still bringing in more revenue, 326 million, EPS miss. Look at that, 443 million. Revenue's definitely chunking in for this stock. We're missing big on the EPS side, but as we know, it takes money to make money. So, in my opinion, with a growing stock like this, I would value the revenue, in my eyes, more than the EPS side. But 465 million. Now, for this quarter, look at these estimates now, 510 million. So this is definitely a growing company on the up and up. Sitting here a touch below $91 a share today, dropped 10.5 points, 10.33%. It's up about 1.25 points after hours. Of course, we have class action lawsuits and whatnot always on almost every stock. But let's see what's going on here. Price target maintained 160 by RBC. That's a little excessive in my opinion. maintain a buy at stifle, target cut from 167 to 100. I do still believe that's overvalued in my opinion. But again, I understand aviation. People are talking about these drones, and again, somebody like ACHR, like, oh, they might get into the military segment. I understand the appeal. I completely understand the appeal. But again, the problem is we may be taking them too high too quick. Fallout from short sellers report. Oh, we're probing. Somebody said its audit committee would investigate claims of financial error made by short seller. Uh-oh. I guess that explains the massive drop down. And it's funny because, I swear, you guys know, I really have no reason to lie to you, but I was looking at this stock. Again, someone requested it months ago. And I'm looking at these trend lines, and I'm looking at the numbers, and I'm like, yo, this stock really needs to break down. This thing should be like here. And now it's literally been happening over the last couple of days. I'm very, very upset with myself. Obviously, from a trading perspective, if I made a video here at 160 and said I would personally consider puts, then all of a sudden the stock drops to 70, I'm sure the profits would have been insane. But we're talking about a market cap $9.33 billion after the drop down, right? Stock was at 180, meaning that the market cap was up at 18 billion in change just as of a couple of weeks ago. And we're bringing in, 400 or 500 million now a quarter, which is awesome. And that's close to about 2 billion in annual revenue, which is why when I saw it at 18 billion, I was like, this is ridiculously overvalued. But just my opinion. EPS has been missing again, but the revenue's climbing nicely. If we look annually, we can see, look how well the company's been doing over the last couple of years. For 2023, about 1.2 billion in revenue with almost $250 million in profit. So that was about a $1.5 billion year for the company. If we check the numbers real quick, okay, we have a dividend that has been lowering over the last couple of years, which in my eyes is a bad sign. The debt has been consistently increasing up to 3.22 billion for last quarter. Free cash flow technically slightly more negative, minus 133 million this time last year. Now we're at minus 145 million. Cash got up to over 100 million for the last 2 quarters. But yeah, I mean, technically the debt outweighing the cash, right? So we would, if we subtract the cash from the debt, you would be looking at around negative 3.1 billion. We have assets outweighing liabilities in the short term, but not in the long term. If we come over here, we can see the equity now is up to above that 100 million mark. Had a big drop down last quarter, but 2 quarters ago, excuse me. And now as of last quarter, back up to about 118.5 million. Right? So 118.5 million equity. And if we look at the revenue again with the profits, if we put that at 1.4 billion, 1.5 billion, even if we add that, we'll say 1.6 billion. But the debt again outweighing the cash, negative 3.1 billion. So in my opinion, this company right now has a negative quote unquote fair value, yet we have a market cap of 9.33 billion. So believe it or not, in my opinion, a company like this can completely pull back to a valuation of 2-3 billion, I think, in my opinion, still being nice. You can see the book value. Look, we recently just got back above $1, had a big drop down 2 quarters ago, and as of last quarter, $1.15. Stock sitting here at 90, 92, right? So this is why when you look at companies like this that go too high too quick, I appreciate the FOMO. And I appreciate the fact that you might have looked at it, you almost bought it, now it's up huge. I understand that, but in my opinion, when a company is overinflated in the fundamentals, that's when I would personally just remain patient. And again, it seemed like it was unstoppable and you completely missed the boat, and now all of a sudden, short seller report, filings delayed, and now the stock is dropping down and could potentially pull back to this trend line here of about, 55, 54, 55, right? So what you thought you missed at 160, 180 is now potentially going to be on sale for you in the 50s. Or even down here, maybe at the next trend line, maybe 43, 44, right? So that's why, in my eyes, sometimes it's better just to wait. It's better just to wait and remain patient. but maintained by BTIG, price target rate. See, again, all of this came out really before that short report hit, it looks like. So now I'm curious if they would reevaluate. $3 billion plan was this? Planning to deploy $3 billion annually to acquire and manage Boeing 737NG and Airbus A320 aircraft. But the real genius keeps the high margin engine maintenance, locking in recurring revenue while shedding the capital heavy leasing model. Add to that their guns, 1.1 billion. I don't know. Again, I still say, even after this big drop and now sub 100, I still say, in my opinion, overvalued. Still say overvalued. And I wanted to see something out of curiosity. Is this domestic? Headquartered in New York, New York. All right. And where was ACHR? That's in Cali. I don't know. Again, I feel you can get better prices. Look at that big drop. Came right below that 50-day moving average and now completely broke down and out of this tight upward channel that it was in. Look at the RSI on this stock. This is why, again, even over here, I might have said it was overvalued if I knew about the stock. And then, a lot of people would have came out and said, oh, you completely missed the boat. You don't know what you're talking about, blah, blah, blah. And granted, yeah, if you bought when I would have said I wouldn't, and you sold here and secured that profit, then yes, you were right. Now, if you're still holding on this breakdown and now you're hoping for it to get back to 180, in my eyes, I think it's going to significantly pull back before it slowly gets back up to that level. So that's why if you happen to miss that high sell, you might be locked in for a long ride now. RSI, again, was significantly overextended. That's on the weekly, by the way. We're looking at the weekly, not the daily. But you can see, again, the 200-day moving average is about 45. Which, nope, we're looking at the wrong stock. Right? Which, again, if we break down over the next quarter or two, let's say, before they find their footing, you can see 44 and change, high 44s. So, yeah, in my opinion, that's the price I would look for. That would be half the value of this, which would bring us down to about 4.6 billion. I think that's definitely a much fairer valuation. RSI now finally coming back down to earth, 39.5. On the daily, RSI 33 1/3. In my opinion, it keeps dropping. And let's check the short float quickly. But yeah, I know I definitely spoke for longer than I wanted to. Short float on this one's only about 3.8%. So I think both of those companies, ACHR and FTAI, you can get at better prices. And yeah, that's pretty much everything I have to say. And again, I wanted to do this quickly, and I can feel that I spoke for too long. But hey, listen, it is what it is. But I have a feeling that we may see big price adjustments on FTAI. What was the most frequent one, actually? The most recent one, excuse me. 2 days ago was maintained at 160 by RBC, maintained by 2 days ago after the big drop. Yeah, I disagree with that. But we'll see what happens. But listen, if you bought into these recently, if you've been holding them for a while, and again, something like FTAI, I understand that growth in revenue, so it was really starting to take off. So this might be one you can see that you might have got back in here in the 20s and the 30s, right? So obviously, you probably still believe in the company. But let us know down in the comments if you own this one for a while, if you bought in recently, if you've been trading these, if you agree, disagree with what I have to say, in my opinion. But that's it. I'll end it there. Once again, Stocks by the Numbers. I want to thank you for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually pretty quick to reply. Thumbs up algorithm helps me get more eyes on the channel, and of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, and they are very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Have a great weekend.